Welcome back at 9:45 a.m. Eastern Time. Just over 24 hours from now, the Bank of Canada is expected to announce a 50 basis point rate reduction in the overnight rate. That would take it to 3.7% from the current 4.25%. That's a very common call among economists and bank watchers, and the overnight swaps index market is also making that call. Our next guest does expect a 50 basis point rate cut. He also sees the probability of 50 basis point cuts in December and January. David Doyle is head of economics at Macquarie Group, and he joins us now. David, thanks a lot for joining us. Tell us what you expect the bank to do and say tomorrow.
Thanks, Paul. Yes, as you described there, we do think that they'll proceed with a 50 basis point cut. I think they'll be very reassured by the recent inflation data that showed the headline number coming down to about 1.6% year over year. But on top of that, shelter inflation, which had been a concern for them earlier in the year at the outset of the rate cutting cycle, appears now to be moderating. Wage growth as well now appears to be moderating. So I think that had been something that had made them hesitant to cut more aggressively during the summer. And I think the inflation data for September released mid-month of October, I think will give them the green light to do 50 basis points tomorrow. And
you see more 50 basis point cuts coming?
Look, I think there's a risk of that. Our baseline case is that they'll revert back to a 25 basis point cutting pace ahead. A lot of that stems from our belief that overall global growth, particularly out of the U.S., will remain strong and resilient. But there is a risk in there that Canada's economy continues to be left behind, so to speak, and that the BoC will act more aggressively in that context. I think the key thing for viewers to be aware of is this mortgage rate reset challenge that Canada faces. So, of course, because of our 5-year fixed rate mortgages, you had very, very low rates in 2020 and in 2021. That means that in many ways, the BoC cutting aggressively here is just offsetting somewhat the embedded tightening from their previous rate hikes that occurred in 2021 and 2022. And that I think is key to understanding that the BoC will need to be acting more aggressively than the Federal Reserve, as they have in recent months, and we see that continuing ahead.
Am I correct in inferring that you believe, you and your colleagues believe that the bank has begun cutting too late and is behind now?
I wouldn't go that far, Paul. I'm not going to accuse Tiff Macklem of making an error in any way, shape, or form. I think he's done an excellent job so far. I just think the data has evolved in a way where it's allowing them to step up the pace of easing. So, and I think it's appropriate, especially given the recent moderation in inflation. We think that recent moderation persists and allows the BoC again to cut continuously, at least through the first half of 2025. And the risk to that, again, is that they front load the easing cycle. So we'll see how they respond as the data comes in. I'm keen to see how they communicate or what they communicate about the September inflation report tomorrow, because that could give some insight into whether they'll persist with further 50 basis point cuts ahead, or whether they'll revert back to that 25 basis point pace that we saw over the summer.
Is inflation over now? Is the battle against inflation conclusively over?
I don't know if I'd go that far. I think we'll have to interpret it as the data comes in. But I just think it's clearly now that I think in the summer you would have some debate over whether or not the BoC had gained the upper hand on inflation. It now seems to be the case that they sort of have that upper hand, and I think that gives them the flexibility to ease more aggressively. We'll see. I think that it's there's a lot of factors that go into thinking about where inflation will go. There's some chance that it resurfaces, I think, in the second half of 2025 if we see growth pick up. But I also think that that's a battle for a later day. I think in the here and now, the BoC has to be concerned about both defending inflation from below, right? With in terms of us now undershooting the 2% target. But I think even more important than that is that unemployment has become, more elevated, right? At 6.4%, jobs growth is subdued. Messages from the labor market suggest the output gap is either widening, it may not be widening anymore, but it certainly isn't closing. And in that context, easing more aggressively is appropriate in the here and now.
Tell us more about what you will be looking for in the monetary policy report, which is about a roughly 30-page document in which the bank takes a very close look at what it's seeing in the Canadian economy.
Yeah, so again, inflation and the dynamics of inflation, that will be the key focus and what we're looking for, any sort of commentary or analysis they've done on that front. They haven't really talked much about the threat of tariffs that could emanate from the U.S. election results in early November. That would be something that I think could be explored. But again, I don't know if they'll address it yet or if they'll wait to do that, potentially in the January report. I think this dynamics of the mortgage rate reset challenge that we just talked about a couple of minutes ago, Paul, that will also be very important. In the past, they've done some, I would say, bespoke analysis based on data that they only have to give some insights into what that's looking like. So I personally, I'd be very interested to see an update on that front. We have a general sense of where that's at, but to get some sort of further detail on that from the BoC, I'd be keen to see that.
Donald Trump could be president in January, of course. He has made some comments on the North American Free Trade Agreement, now known as USMCA or CUSMA in this country. And you believe that Tiff Macklem could be asked some questions about the possibility of trade disruption in the near-term future. How do you think he handles that question?
Look, I think he'll be very cagey in his response to that, given the uncertainty of the election result and also the uncertainty with which how a potential Trump presidency would treat the USMCA and the sunset clause that's set to kick in July of 2026. I think he'll just emphasize the uncertainty and that the BoC will incorporate shifts to the trade environment as they occur. I don't expect him to speculate on what might happen. But as you suggest, Paul, I do think that there will be questions on that front in the press conference.